As the story unfolds, Meghan's next steps will be scrutinized closely. How she responds to this challenge will undoubtedly have a lasting impact on her financial future. The rejection by Bank of America may have been a significant setback, but it also serves as a crucial turning point in her post-royal journey. Whatever path she takes, this event will continue to shape both her financial trajectory and her public narrative, fueling further discussion about the intersection of fame, wealth, and the limits of influence. Financial experts have weighed in, suggesting that using royal titles for financial transactions in the private sector is risky at best. While Meghan and Harry have certainly used their royal ties to land media deals, speaking engagements, and brand partnerships, the idea of presenting those titles as collateral or part of a loan application is seen as unusual and even unacceptable by major banking institutions like Bank of America. The timing of this incident is significant as well. Meghan has been at the center of numerous controversies, navigating public criticism and failed attempts to secure large-scale partnerships. From canceled projects to rumored disputes with business partners, her professional ventures have often made headlines for all the wrong reasons. Now, this loan rejection has added fuel to the growing narrative of financial turbulence that surrounds her. Sources indicate that the bank took issue not only with the use of royal titles, but also with Meghan's overall financial profile. Her high-profile lifestyle, coupled with recent spending habits, may have raised some red flags. Banks typically assess loan applications based on factors such as income, assets, creditworthiness, and collateral reliability. While Meghan's media deals and brand partnerships have brought her significant attention, they apparently failed to meet the necessary criteria for approval in the eyes of the bank. The rejection highlights a deeper narrative about perception versus reality. Publicly, Meghan is often portrayed as a global influencer, philanthropist, and media powerhouse, yet her financial actions suggest a level of volatility that has not gone unnoticed in the industry. The refusal of a loan by a major U.S. bank underscores the gap between the public image Meghan projects and how financial institutions view risk and stability. This incident reignites conversations about her reliance on royal connections to further her personal ventures. Critics argue that Meghan has repeatedly attempted to capitalize on her royal status in ways that have created friction with various partners and institutions. This latest loan attempt appears to be another example of overreach, another gamble that didn't pay off. Observers have noted that using royal titles in official financial applications is not standard practice, and banks are under no obligation to accommodate celebrity status or social capital. The rejection of the loan sheds light on the intense pressures associated with high-profile life transitions. When Meghan and Harry stepped away from their royal duties several years ago, they began pursuing media projects and brand deals to support their newfound independence. However, the financial scrutiny they continue to face remains intense, illustrating that fame and visibility do not automatically translate into favorable financial treatment. Financial institutions make decisions based on tangible criteria: facts, figures, and reliability, not fame or public sentiment. Entertainment commentators have quickly reacted to the news, framing it as both shocking and somewhat inevitable. Meghan's past controversies, from public remarks about the royal family to high-profile legal disputes, have shaped a narrative where her personal brand is seen as both alluring and risky. In financial terms, that risk has translated into denial. Bank of America's decision is now being dissected across media platforms, with many speculating on how it will affect Meghan's future ventures and credibility as a businesswoman. Experts suggest that she may need to reassess her approach. Using royal titles to project authority and prestige may have seemed like a strategic move, but it signals a misunderstanding of conventional financial protocols. professional guidance, strategic planning, and credible collateral are likely required to secure approval for major loans. This situation serves as a stark reminder that even celebrities with global recognition are subject to the same rules and standards as anyone else when it comes to banking. The reaction on social media has been swift, with many framing the loan rejection as a reflection of Meghan's perceived entitlement. Others, however, defend her, pointing to the systemic challenges women face in finance and business. Regardless of the perspective, the story has dominated discussions, driving engagement and speculation about Meghan's next steps. Will she seek alternative funding sources, or will this setback prompt a more cautious, conventional approach to financial strategy? Industry insiders believe the latter may be the wiser path. The story also has implications for Meghan's ongoing media and brand projects. Investors and potential partners are paying close attention, and a publicized loan rejection could affect confidence in her future endeavors. While Meghan still commands attention and has a loyal following, financial credibility plays a crucial role in securing large-scale partnerships. The rejection by Bank of America is not just a personal setback. It sends a message to other financial institutions and potential collaborators about how seriously her financial proposals will be taken. This is not the first time Meghan's financial decisions have come under scrutiny. From purchasing high-end properties to making expensive lifestyle choices and launching ambitious media projects, her spending habits have often been discussed in the public sphere. Each new revelation feeds into a broader narrative, one that mixes fascination with skepticism. This loan rejection is yet another twist in an ongoing story that reinforces the perception that Meghan's financial journey is anything but conventional and often unpredictable. The incident also raises questions about the role of celebrity influence in traditional sectors like banking. While star power can open doors in entertainment and media, financial institutions operate on structured risk-based models. Meghan's experience underscores the limits of celebrity leverage when it comes to formal financial arrangements. It's a reminder that fame does not exempt anyone from the rules of creditworthiness and accountability. Looking ahead, Meghan's next moves will be closely watched. The loan rejection will likely spark more conversations and debates, drawing further media coverage for weeks to come. Analysts predict that she may turn to private investment networks, celebrity-backed funds, or other alternative financing models more receptive to high-profile figures. But whatever she decides, the public eye will remain on her, and every decision will be scrutinized, analyzed, and critiqued. This episode is more than just a financial setback. It is a reflection of the complex challenges that come with balancing fame, wealth, and independence. Meghan Markle, once seen as a beacon of grace and ambition within the royal family, now faces mounting scrutiny from multiple fronts. The Bank of America loan rejection represents both a personal and professional challenge, underscoring the delicate balance between public perception and institutional judgment. It's a reminder that even global celebrities are not immune to the rules that govern financial life. As Meghan navigates her next steps, the world will be watching. Will this denial spark a strategic recalibration, or will it become another chapter in an unfolding saga of ambition, controversy, and financial drama? Whatever happens next, the story of Meghan Markle continues to captivate, provoke, and spark debate. She remains one of the most compelling figures in public life, whose every move is followed by millions. The loan denial from Bank of America isn't just a simple rejection. It's a statement about risk, credibility, and the limits of leveraging royal status in the world of finance. Experts note that attempting to use royal status as leverage in financial negotiations is not only risky, but could also be seen as fraudulent. The blacklisting goes beyond just this loan attempt. Any future applications that reference royal titles or positions will likely be scrutinized or rejected outright. For Meghan and Harry, this could severely limit their ability to access traditional banking options, forcing them to rely on alternative financing sources, often at higher costs. Industry insiders suggest that the rejection places additional pressure on the couple to generate income through media deals, endorsements, and other private ventures. The denial of the loan is emblematic of a broader pattern in Meghan's financial dealings. From canceled projects to partnerships that unraveled under scrutiny, her ventures have often faced obstacles that less public figures might never encounter. Using royal status as a negotiating tool may have worked in some contexts, but the banking sector operates on hard, clear criteria: proof of income, creditworthiness, and legitimate collateral. No amount of fame can bypass those standards. This incident also raises questions about how Meghan plans to navigate her financial future. Some sources claim she's exploring new ways to monetize her public profile, including branded projects involving her children. But the rejection from Bank of America serves as a stark reminder that even powerful celebrity brands have limits. Attempting to convert royal titles into financial leverage not only failed, it has potentially damaged her credibility in certain financial circles. The public's reaction has been swift, with many framing the bank's decision as a justified rebuke to entitlement. Others point to systemic challenges women face in the financial and business sectors. But one thing is clear: the story continues to dominate public discourse. Financial experts suggest Meghan and Harry may need to turn to private lenders, celebrity-backed investment firms, or other high-risk financing sources for their major ventures. These options come with stricter terms and higher interest rates, which could further strain their financial stability. This entire saga raises questions about the role of celebrity influence in traditionally formal sectors. While star power may open doors in entertainment, fame doesn't guarantee favorable treatment in banking. This situation serves as a reminder that reputation and public perception may open doors, but financial institutions operate on rules that apply to everyone, regardless of fame or social capital. As the story unfolds, Meghan's next steps will be scrutinized closely. How she responds to this challenge will undoubtedly have a lasting impact on her financial future. The rejection by Bank of America may have been a significant setback, but it also serves as a crucial turning point in her post-royal journey. Whatever path she takes, this event will continue to shape both her financial trajectory and her public narrative, fueling further discussion about the intersection of fame, wealth, and the limits of influence.